What's going on, everyone? So, in today's video, guys, what I want to talk about is put options, how to play put options, okay? And the platform I use to do that is Robinhood. Robinhood is the only broker I have that I have options even enabled on, okay? So, all my other brokerages, I'm either just buying stocks or I have margin for short sales, okay? So what I want to do, guys, I'm going to go through kind of step by step how I play put options on Robinhood. And again, I will emphasize this. If I had my pick, I would rather short a stock than play options, because when I short a company and the price goes down, I am making money immediately. All I got to do is cover and I've made my money. It's the opposite of buying and selling a stock. With options, you have a break-even price that you have to meet, okay? So when you buy put options on a company, it has to meet a certain price, then you start making money. So you basically, you pay to play. You pay, Robinhood or whoever your brokerage is so much money, and you have to earn that money back through stock price. Then once you hit a specific price, anything beyond that, that's your profits. But what I was kind of getting at is that a lot of times I get in my accounts to short a stock and it's not available to short. That's when I switch my game over to put options, okay? Right here, guys, I've got General Electric pulled up. I think we can all agree that General Electric is in a bad place. It's probably going to go down lower. Now, would I want to buy put options on GE today? No, absolutely not. I do not want to buy puts on GE today because the price is already depressed so much. I want to see GE actually rise back up a little bit. And another technique I want to make sure you all understand is do not be playing shorts or put options near earnings calls, okay? Because you never know what's going to happen. And then you could really find yourself in a mess. But let's just get into this, guys. What I'm going to do is I'm going to go through how I would approach a put option on General Electric, and I'm going to kind of explain as I go. Then if you all have any questions, like I said, go down to the comments, ask me questions, and I'll help you work through them. I'm on the Robinhood website, but the app is pretty much the same format. And so right here, guys, just look for the review order on any stock. So right here, you see we got GE. I got GE pulled up right here. Just scroll over and come down here and look for the review order spot on the on the website. So you got review order, and then go right down here and click trade GE options. That's the one we're going to be selecting. All right, guys. So right here, this is the GE options page, and let's just go through this real quick. You have buy for calls. You have sell for calls. Of course, you would need at least 100 shares to sell calls. Then you have buy for puts, and you can also sell puts if you have at least 100 shares in your account. But we're not going to worry about any of that mess today. We're just going to concentrate on buying put options, okay? So this is if you want to buy puts in GE. Like I said, do not do that today. The price is down too low as it is. We would like to see it rebound a little bit, then we will buy some puts. And actually, me personally, I would rather just short GE. So right here, this is the most important thing, in my opinion, to really concentrate on, is the expiration. So you see right here, guys, this would be expiring on December 14th. That's 1 week from today, okay? And I don't like to play options that way, okay? So me personally, what I'm going to do is I'm going to try to move this out a little bit. Here's all the dates that your options will expire on. So you got the 21st, the 28th, the 4th, the 11th, and this really just goes on. See, like I said, you can even buy options for January of 2020. So you can put it over a year off if you want to. I'm not really going to be buying any of these options today, guys. I'm just going through with it. But I'd like to see you put it off into the future a while. That way you have time to work this trade, okay? And you might need to buy more options down the road. Okay, so I'm going to set it up for June 21st, 2019. I think that gives us plenty of time to meet our target price that we want to deal with. Like I said, if you set a real short-term option, just remember you have to meet your break-even point, and you have to, sell your put options. And if you don't, you're either going to sell them at a loss or they're going to expire worthless. So make sure you're buying options, a couple of months into the future. So I opened up another page, and it's really handy to pull your phone out. And when you're setting up options, I always have my phone out when I'm doing options. But right now, guys, GE is trading at $7.20. So let's go back. So right here, guys, you can get a break-even point of $7.20. So you would not even need the stock to go down at all to break even on these options. It's going to cost us $2,285. Okay, so let's try to let's try to find something a little less aggressive. So this line right here, guys, right where my mouse is, this is more my speed. This is more of a put option I would do if GE price was spiked up a little bit, if it had a nice big rebound, if we were at like 815 or 820, this is the kind of option I would be looking at. So you got a $10 strike price. Your break even point is $6.85, so the stock needs to lose 4.3% of its value for you to make your money back. So let's go ahead and select it and walk through the steps and see what it would cost us. So look here, guys, I'm just going to buy one contract. I'm going to put my limit price in as $3.15, and it never expires. I never use daily. I always use never expires. So that put option would cost us $315. So you pay $315 before you accept the trade, before you get your contracts, okay? And then right here, so let's just assume we went ahead and bought puts in GE today. The stock would have to go down to $6.85 for you to make your $315 back. Then as the stock goes under $6.85, that's where your profits come in. So if this stock runs down to $6.50, you can go ahead and sell these put options and you would have a profit, okay? So those are really, really good options. That's the kind of options I would be looking at. Okay, you're going to look, well, we might not get a lot of profit on this limit price. So let's just crank up our contracts. You can get 2, 3. If you want to spend a lot of money, you could put 5, or you could wait for the price to move a little bit and buy more. But that's basically how it all works. Like I said, I don't want to overcomplicate these things. I've seen a lot of channels try to explain options and they turn it into rocket science. There's no need for all that. A put option is the same thing as shorting a stock. It's just you don't make money until you've hit a certain break-even point. And call options is the same thing as buying a stock. You're just not making money till you hit a certain break-even point. That's all it really is, guys. So anyways, guys, I'm the kind of guy, I try to just make videos and get right to the point and kind of get my message out there. I've probably missed a few details here and there, but I hope that helps you a little bit. And if you have any more questions, go down to the comment section and feel free to ask. And I can always make another video later giving a better explanation of things. But that's the simple mechanics of a put option. It's very, very simple. For those of you that don't have short selling accounts and don't have marginal accounts, a put option is a great way to play the downside of the market. This week I've actually sold 2 put options, and I think I made roughly $1,200 between both of them. I made $815 on one, and I made like $390 on the other one. So again, I'm more of a short guy. I think short sales is the way to go, because as soon as I strike and the price goes down, I'm making money. I'm in the green. The one hold back with put options is kind of the same concept, is that you have to hit a break-even point, then anything under that is profits and you can sell. But put options are a very big tool I like to have in my at my display, and it's really availability. So drop me some comments, guys. Let me know what's on your mind. If you got any more questions, I'll be glad to help you, and thanks for watching.